Welcome back. And I must be honest with you, there's a lot of people that would love to buy Bitcoin. I can remember in December, I think just before we closed, I showed the chart uh, on the weekly time frame, and it made this sort of a consolidation. And I was not 100% sure, but I think it's 17,000. I actually sent out a little note and say, listen, I think Bitcoin is one to turn around and maybe give us a little bit of a bounce. Well, what happened since then? I mean, Bitcoin really took off. And what's interesting about it, I'm watching Bitcoin, but I'm not trading it. I'm not investing in it. But what's interesting is look at this. And I know there's a lot of viewers that would actually want to get involved with Bitcoin. Now, if I look at this chart, what do we see? We see a beautiful consolidation down here. That made us excited then already. Let's just get that level view. So in future, if you watch a share, you can maybe look at the consolidation phase and say to yourself, what will happen if it breaks? I can remember there was an old book. I mean, a lot of you know the book. Nicholas Darvas wrote about it. And he was a dancer, and he discussed a lot about these consolidation phases. This consolidation phase he usually saw as a place where the athletes or the dancers were training, and the moment when this consolidation is over, it breaks up, and then the dancer can perform more and maybe attract some more people to watch his show. But this is exactly what happened with Bitcoin. I mean, it gave us a classic breakup above 17,175. And what happened since then? I mean, from 17,175, it rallied almost in a straight line up to 23,270. I mean, that's a massive rally. But I think for the long-term perspective, this is the 40-week moving average. And this is a weekly chart. And we are above the 40-week moving average, which favors Bitcoin. Doesn't matter who's saying what. Doesn't matter who's saying it's speculative or it's just an instrument or there's no backing. I'm not the guy to say, listen, you can or you cannot invest in it or trade in it. The only thing I know above this 40-week moving average, it looks positive to me. And while it is trading above 21,240, the support line, it looks very bullish to me. So for the long term, let's call it traders or investors in Bitcoin, let's hope it comes back to this line and then bounce off there, because I mean, then we will have a classic buy. Because what will we have? We will have a consolidation above the 40-week moving average. We'll have a test of the support line, and then if it breaks up and there's the line, that will be our buying signal. If it then breaks up, and remember, it must come back a little bit because it gave us a lamp formation. If it comes back and it trades above or moves above 23,550, we know that this share wants to make higher highs and that the momentum wants to turn to the upside. Where will be my stop loss? My stop loss will be exactly at this 40-week moving average, 21,450. But just keep in mind, and I've seen it on a few platforms, the one platform that I'm using to trade the S&P 500 in, I sometimes look at the margin requirements, and Bitcoin has a massive margin requirement. I don't know what's the reason for that. Maybe it's because of the risk involved. So maybe just keep it in mind if you trade into an instrument. Just look at the margin requirements. That, let's say you've got 10,000 Rand in your account, and suddenly if you trade one Bitcoin, the margin is 9,500. Then you've got little money to play around. So be careful about it. But I mean, this instrument looks okay. But we'll watch it. Maybe in a few weeks' time, we'll be surprised again. Well, let's look at Kumba. And they are big in the iron ore, and they do also coal. And look at this, share looks okay. It sold off, can you believe it? From August 2021, it sold off from 780 to, can you believe that, 346 Rand 59, and since then it gave a beautiful rally. And this is the lesson about commodity shares. And remember, our market is driven by commodity shares, but also technical technology shares like the Naspers and the processors. But Kumba is a commodity share. But the reason here that I want to show you the chart, apart from the request, look at commodity shares. They can rally up beautifully. Then you think they will go to 1,000 Rand. Then they drop all the way down to 400 Rand. Then you believe it can go to 100 Rand. And just as you think it's rock bottom and it can go even lower, then it rallies up. So this is exactly the case here again. Beautiful rally from about 350 Rand to where we are now, 520 Rand. But I'm seeing something here. Although it is bullish for me, I just want to show you about this. Maybe I'm a little bit nervous on Kumba, because I mean their counterparts like in the commodity space, like the Anglos and the Billetons, and I know they've diversified. Kumba is more of a pure play. I'm seeing this ascending channel now. An ascending channel is usually a channel that tells you that we can see a little bit of profit taking. Now, if we break below 524.50, that's on a weekly close, we can easily see the share coming back to 496.70. But while we're above this 40-week moving average, it tells you that maybe it will be only a temporary pullback, and then from there it will rally onward. So we'll have to see. But the viewer asked me, can he buy Kumba? And I think maybe watch this ascending channel, see that there's a little bit of profit taking, then climb into it if there's a beautiful turnaround. Let's maybe have a look at the candles quickly. I just want to see, maybe I can answer the viewer there. Same story, interesting here. It's not a ascending channel here, but we're seeing here a rising wedge. Now a rising wedge is exactly the same. It's also a warning formation, but look at the candles here, nervous candles. There's a dark cloud cover, and I think also below 516 we can maybe see it pull back, but I doubt if it will go below this 40-week moving average. We'll have to see. But I think it's not the time to buy now. I'd rather wait for it to pull back a little bit, and then we will look at the share maybe as a buying opportunity. Let's look at Merafe. There you are. Merafe. Oopsie daisy. There's the 40-week moving average. Again, a weekly chart here. Look at this beautiful bullish engulfing candle. In actual fact, you can almost say it's a piercing candle. Strong bullish candle. But it lost all momentum from there. That's interesting. It rallied from 129 all the way up to 143 almost in 1 week. And suddenly now it's testing the support line. Let's have a look here. There you are. There's the support line. And it's on the brink. You can almost say it's on the brink of turning into a resistance. That doesn't look healthy to me. And look at that, there you are. You also see a rising wedge developing here. I'm not as excited about Merafe if I look at this chart, because what do we have here? We have a rising wedge. We've got a move below the 40-week moving average. The 40-week moving average is sitting at 137. So it needs to break above 137 to turn that into a support again. But I've got an idea. Maybe we will first see a little bit of a pullback here. Let's just draw in that line. So for the viewer that wants to be involved with Merafe, I think maybe he can get it a little bit cheaper. If this chart is correct, we can maybe see a pullback to about R1.18. And then usually what I do is, if I do have a target like that, say for instance R1.18, at that point, more or less, I will watch if I can see some nice turnaround candles before I get involved. Let's have a look at Food Locker. I mean, that's that massive group in America, retail company. And once again, this chart looks beautiful, but it also teaches us a few lessons. Look at Food Locker, and I always like to see that candles are emotional plays, like in an act, like an actor that plays a role. Look what happens with Food Locker. It gives you this beautiful strong candles up and then suddenly strong candles to the downside. So if you're involved with Food Locker, you must always remember that the share can easily surprise you and give these rapid moves to the top and maybe to the downside. But if I look at this beautiful move above the 40-week moving average, in actual fact, it's a consolidation. But what do we see? Strangely enough, tonight's show is telling us there's definitely a few ascending channels here. There's a few rising wedges in the program. And I always say I like to use the requests because the request that I do get from the viewers is the normal retail investor. Yes, I've got a lot of fundamental managers that I'm working with, but the guy that phones in onto, not phones in onto the show or send requests, they usually retail investors, and they give me an idea what they think about the market. And what do we see here? Suddenly we see a rising wedge, and oh well, it's way back 36 Rand 10 cents. It can break to the downside and take it down all the way to 26. But for me, I think we're going to play within this band. So for the viewer that wants to buy Foot Locker, I think let's wait for it to pull back, maybe to this level of 35.90 or even to this low as 32.60. Because remember, a lot of our markets had massive rallies. And if the Dow and the S&P and the Nasdaq pull back, we'll probably also see that. I've got a request on Walmart, also a massive retailer. Let's have a look here. Wow, beautiful chart this. Look at this massive sell-off. Can you believe it? From 149 to 120 in one straight go. There's a turnaround candle. Unfortunately, our time is almost out. And what do I see here? I see a head and shoulder formation that worries me. And we're busy with the right shoulder. There's the left shoulder. There's the head. We may be working on the right shoulder. Below 141, it will actually be a sell. It can maybe go down to 130. And I think there we can maybe look at the turnaround candle, because look at it. There's the support. We'll probably find the support somewhere here on this long-term chart. Well, thank you for watching the show. Our time is out as always. Visit our website www.fransdeklerk.com for more info, and we will chat again.